want to first talk about shorts at all-time high. So here, let's put our drawings back on. This, if we're looking at time, market closes here. And we make a move up. So as we watch price move up in the afternoon session, we see, if we zoom in, a very non-aggressive draw on what I think is remaining liquidity from the wick. $20 in distance, roughly, or 8%. So if you were to place get out of here, a sell limit order at the wick, 26376. Put on two of those. Okay. And if we are targeting the gap, which we're not at yet, but there's still time. That's pretty good. So we're not there yet, but as of right now, we're still at 1900 for that's a 20x position. 20, look at this. 27 RR. This is what we're going for. It's tough to have the patience to look for these, and they don't come all the time. So let's just be honest and say there's going to be some things we can take in the middle. But this is what we should be waiting for. And I think the trouble that I had was, for me, I did not wait. That sucks because, I'm addressing my emotions in the moment, and I can tell you that I tried to just get short in here many times over for no reason, and then eventually I re-entered somewhere around here. So I was in it, which is fine. So, but realistically, I should have demonstrated more. What I was going to say was more patience, but realistically, I think I should have demonstrated more of a plan. It's at 2 p.m. to 3 p.m. That's when I do my if, then, nearest draw. Now, we don't know, but we make some guesses, right? I think that really is the power to say, like, well, if price goes this way, then we will look for opportunities at these areas. So looking back at this price action, that we could have said during the session break, all right, so like I got into there and I was like, price is going to go down. I immediately thought price is going to go down, therefore I should open short. Price did not do that. Price went up, and I was already in drawdown. So price had to move up before price went down, right? It's very possible that price could have just went down. It's possible that we could have drawn here before going here. I don't know. We're not required to like win at what's going to happen. We need to kind of make some assumptions that's like, well, this is what I think will happen as we move into that time frame, and just kind of like let it play out from there. Because we did have some entries in here that resulted in a good size win, but that win could have been better considering what time we were involved in price. So I just want to point that out to you. I think that was the same on ES. So ES did not have a wick during the FOMC, or it did, but it didn't break the high. However, same thing applied. 8 p.m. Boom. We have very little distance, 3%. So this one would have been much bigger in terms of its return. It's interesting how these look. All right, where was I? I apologize. So that's basically it, right? We should be looking at the thing to say this. We should be looking at it say at 2 p.m. We should be marking nearest draw of liquidity up and down, possible path and reaction. So it could be, in this case, we could have said it may go down before it goes up. It may go up and then go down. It may go up and then keep going up. So, and then we need to decide, and then we need to draft a plan at those levels. We need to have an understanding of risk, basically how much. We need to kind of like emotionally eat that risk, set levels, and go do something else. If we get filled, then we manage, which is trail plus TP at level. And then if we want to right, so what I mean by that is for this case, so let's proceed with the second thought here, which is going to take us to the orb. So looking at the orb, or not even the orb, but the daily price action. One of these is not printing correctly. Whatever, doesn't matter. here is the 1 minute chart. We don't have it here. It's not printing. I don't want to update it. I'll just refresh it. Reload it. Here we go. Show me this on the 1 minute, please. So on the 1 minute in the morning, we got the play that we always want to see. The jewel coming in at our macro 645, giving us, a standard distance, right? Open, boom, open here. This is your risk. You just kind of got to eat it. So if it's wrong and you lose, it's wrong. You can shoot twice, and you close your trade once you get the curve. This occurs after having usually 2 sessions of down. Now this could be a reversal, but if it's going to be a reversal or a pivot or whatever, it's going to happen at a relevant price level. So in this case, we got that signal this morning as price hit an order block, I believe, or something. I think this hit some area of interest, whatever. That's all we need to know. There was some area of interest hit here. We got the move. We will close it here. And you could be sizing this one appropriately. So if you entered on basically there, right, with your take profit where we get that curve here, just somewhere around here, 140 ticks, with your stop below, this is 10 to 1. 10 to 1. Now, it's probably not going to be that good. Let's see, now it's 2.8. Interesting. Yeah, it's good to know. It's good to know. I don't think there's enough time to have put in like a better order, right? 1 minute. You see it print. Yeah, I don't think you get a better order than that. So you, depending on how quick draw McGraw you are, you could do this. If you cut it in half, you do 5 contracts. The risk becomes 250. Your reward becomes 700, which is still very good. So, but we need to do this on a separate account without the intent to mess up the other position and its movement. And that's it. We would essentially argue that like we're done with that trade. I don't want to keep one open for a runner. One open for a runner. But yeah, I think that's it. So we have major draws on liquidity. We have the jewel macro. We have the orb. Those are the models that are available to us. That's kind of how we should be looking at it. The major draws in liquidity are not macro based. They occur when they occur, and we expect those trades to play out for the duration of the day. This one, 15 minutes, 20 minutes. Same, 20 minutes or more. Should be 2 to 1 RR minimum, also 2 to 1 RR. An expectancy to risk 250 max. right? We risk that. We make 7. 7's good. We can bump that risk up once we pass a certain threshold.